Good evening, everyone, and welcome aboard. It's wonderful to have you here for this usual run around the globe with our traders, and it's called Weekly Sunday Market Update. Actually, it's called Sunday Market Update because we have a Sunday every week, don't we? Bit of superfluous there. Never mind. Look, I'm glad you could join us. As always, we will be trotting around the globe, but we might be a few troops short this week because there isn't a big event that Actions to Wealth is holding currently online, have been all weekend. If you're a part of that, you're probably not listening to me, but if you are not, then that will probably be the reason why we are short on troops. However, we will go through the normal procedure and start, as always, with big picture. And for that purpose, let's go to New Zealand and say a very, very warm welcome to Julian. Hi, mate.
Hey, Geoff. How are you, man?
Yeah, not too dusty. How about yourself?
I'm okay. Still living in lockdown. So I don't know. We're like, yes, it is. We're at the end, near the end of the game here, and vaccinations are going up, and everybody's getting a bit frustrated. We all want to just get on it, but the case count still just keeps just moving along in the high teens and low 20s every day, and it's really frustrating. We just can't seem to get it back into single figures where they know where everybody is. So fingers crossed it happens in the next few days. It's been 4 weeks now, and I totally understand what Ainslie is when she describes day 80 of lockdown as being quite painful. And I'm only on day 20.
Well, so, let's hope you don't get to day
28. So yeah,
sorted by then.
Yeah, exactly. Yeah, fingers crossed.
That seems to be affecting the Aussie dollar in particular. Of course, I'm talking currencies, and I won't delay you from your big picture stuff. But seems to that wasn't a question.
Oh, I think I might have just lost you. You just froze out for a couple of minutes there. So
okay.
I'm just gonna move you guys around a little bit because I need to stand up. I've been talking for an hour, so I need to just stand up here.
You would have to fill your mouth full of marbles and put you underwater to stop you. So you've only got about another 8 minutes to go.
Cool.
What is happening around the place?
Right. So today I am going to share with you a couple of things. So number one, I think markets are pretty boring out there. Okay, so we saw the S&P. You guys saw the S&P trade off 4 days down. Okay, how exciting is that? Well, it's about as exciting as 1.5%. Well, that's nothing. That used to be a big morning, right? But now it's 4 days, right? So there's my overall thesis. If the S&P is still boring, then how can we hope to have a huge amount of interesting things happening on the other side of things? So what I'm going to do is today, I thought I would do a little bit of a deep dive special. And for those of you who have just seen my macro show, I apologize because we're going to do a little bit of repetition here. But I'm just going to do a quick deep dive into the world of shipping. So everybody has heard about shipping costs going up, right? You guys have heard about this, okay? And what we need to do with the shipping is we need to try and understand why containers are costing 4 times as much, because one of the key drivers of inflation that we keep talking about is increasing costs. Why are costs going up, you say? Well, the costs are going up because the cost of shipping is going up. So then question 2 is, why is the cost of shipping going up? Right. So look, there are 4 key drivers behind the increase in shipping. Now, just to be different, I'm not going to look at number 1 first. I'm going straight to number 2. Number 2 is something that happened a little while ago. Okay, this is the change in the fuel to low sulfur fuel. So we got rid of the horrible bunker fuel and replaced it with a slightly less horrible low sulfur fuel. Still pretty horrible, but quite low sulfur. Okay, so what does this mean? It means that there's lots of boats and ships out there that can't run on the new fuel. Really hard. It's not like when you're driving a Ford Escort, you just put a little bit of something in the fuel tank and away you go, right? A little bit of additive and all of a sudden you're fine. With ships, apparently it's way more complicated. You have to try and replace the engine. Now, anybody who builds ships would know engines are quite big in ships, and so they can't really just take them out. So what they do is they scrap them, write them off, and then try and build some new ones. So all of that was going on before COVID hit. And I think the key thing about all of these changes that we're seeing here and the reasons why things have tightened so much is because it was happening pre-COVID. It just was under the surface. So think about it, an accident waiting to happen, a Minsky moment, you might say. And COVID was the last grain of sand on the sand pile creating the avalanche. So changing the fuel is one of the key factors. The second one is labor. Why is labor important? Well, look, guys, you need seamen to be and sailors to run ships. Okay, so what does that mean? Well, apparently there's about 50,000 sailors that rotate every month. Okay, 50,000 come off duty, 50,000 come on duty. That's about 600,000 worldwide, just roughly, of running all those ships which are keeping us all in our Christmas goodies and our teddy bears and cuddly things that we need to get from other countries, right, in time for Christmas. So what's the problem here? Well, the problem here is COVID again has struck again. So what's happened is some of those sailors are either stuck on ships, and by the way, they're only allowed to work for 11 months under national maritime rules out of that year. So what's happened, they've been stuck on ships and they've literally been timed out. So they then have to go home, but there's nobody to come in and replace them because you can't get hold of staff because they're stuck at home on isolation because COVID is so widespread. So here's the problem. There is a huge amount of inertia in terms of sailors being able to man the ships at the moment, let alone the fact that there's a whole wave of people retiring out of that industry right now, not being replaced because you had a bit of a bubble. And the same it is in quite a few infrastructure industries. Those guys who are really big in the 70s and 80s are now all retiring off, and that's creating a shortage of labor. Right? You guys know this because you see it everywhere. Every single country where you guys are situated, there is a shortage of staff in quite a few key industries. Okay, the third reason is pandemic has shut ports. Okay, key ports in China have been closed. Key ports in America have been closed, and that has made the queues longer outside both of them. So if the queues are longer, they're less inclined to swing by small places like New Zealand, for instance, and that then creates its own self-reinforcing set of shortages. Okay, the final reason is container relocation. Who knew? For every 100 containers that comes into the States, only 40 head back out again. So what does that mean? That means somebody somewhere is collecting an awful lot of containers, but realistically, they're just stuck in the wrong place. And again, if ships decide to bypass certain ports because of COVID or because they don't want to go in there because they've only got a couple of containers and they can't be bothered this time, they'll go next time and drop it off at a big port. Why do you want to risk being quarantined for 2 weeks for 3 containers on your 20,000 container boat? You won't bother, right? So what'll happen is they're missing those. So there's a whole bunch of containers stuck here, they're stuck anywhere but where they ought to be. So what does this mean? When we look at the prices, let's look at what's happening. Let's look at what's happening, and we'll come back to look at what's going on in America. So here's the price changes that we've seen. This dotted line at the bottom is the average prices for the last 10 years. Okay, the 5 years, the average price of the last 5 years. This is what's been happening in the last 18 months. Crazy, eh? So this is the European route. This is the US route. $9,000, $12,000 when it used to cost $2,500. Okay, 5 times as much. Pretty heavy, eh? So this is the problem that we're seeing now. Okay, this is US dollars per 40-foot container. Okay, and I think these aren't actually not that high. Some of them are quite low. I think they're actually even higher than this. Okay, but what's been going on here? Okay, so to create all of this problem, all of these price pressures, what's been happening? Well, here's what's been happening. This is imports into the port of Los Angeles for the last January to May each year for the last 15 years. Pretty static, eh? Yeah, some ups and downs, some bigs, and there was 2008 GFC, there's the COVID, 10% down, but still pretty static, nothing special. Bang, here's 2021. I mean, like literally bang. This is like a 2x4 to the head, as the Americans would say, right? What's gone on here? We're 50% increase in volume. So it's not surprising there's boats waiting. It's not surprising you've got problems because your ports workers have got COVID. On top of that, somebody's telling you to do 50% the volume again that you normally do. Okay, crisis, chaos. Okay, this is the reason why all of these things are happening. Now, what's been happening recently is we've seen, and I keep talking about this, is the economic surprise indices around the world are starting to go below the balance line. Okay, so that means that economic surprise is now to the downside and are now negative. That means that the economy worldwide is starting to slow down. We've seen it in China. Let's go have a quick look at what's going on in China at the moment. This is retail sales in China. I don't see a roaring back for the economy over the past few years. Do you? This is what's happening to inflation in China. This is unreal, guys. Look, you take out food and tobacco, the big problem with the pig crisis and the chicken crisis in China, and look at what's going on to inflation. That's the zero line. Okay, no inflation. Okay, so China, Mexico, nowhere near back to where it was. This is Europe industrial production. There's COVID. There's now Germany down. Okay, big election going on there. I wonder, it's all about the economy, stupid, is the moment that's going on in Germany. Okay, so when you look at all of these things, what's going on? Okay, what's going on? The economies of the world are slowing down. So what does that mean for our imports? They're going to slow down. What does that also mean for the prices? These are going to come off. Okay, these are going to probably end up coming down a little bit as the market starts to normalize and people find the containers that they've all lost and they start to get reallocated once those volumes come down. Just to really keep on top of it, this is iron ore prices. Okay, iron ore prices were $220 2 months ago per ton. Now they're 130. Crazy, eh? Absolutely crazy. There's some really weird things happening out there. Do I think inflation is transitory? You guys know I do, because that's what I've been saying for such a long period of time. So let's keep an eye on everything. And as always, my friends, the 30-year bonds run the world, and look at what's been going on. They're still negative real yield, but are they going anywhere? Is this a bear market for bonds? Are they retesting the highs in yields? No, they're sitting there doing nothing. Why are bond yields still so low if we've got inflation? My suspicion is because the bond market knows it's transitory. That's it for me, guys. Geoff, back over to you.
Fascinating, and I can 100% rubber stamp what you're saying about the cost of containers out of China or out of anywhere else at the moment. Because I'm an importer myself, not out of China, but I know quite a few business people who do just that, and they were telling me just 2 or 3 days ago that their price has gone up to 16K Aussie, which is very much in line with what you were just talking about. So
crazy price moves. Let's hope it stops here, right?
Completely. All right, mate. You've been talking for an hour and 15 minutes. It's now time for a cup of coffee. How's the price of coffee?
The price of coffee isn't doing an awful lot at the moment. I think it's still stuck at about 190 on the exchange. I did say, guy, did I not say 18 months ago when I started talking about coffee, when it was trading at $100, that it was going to 250? Well, we haven't quite got to my target yet. I'm still bullish. Maybe one more leg to go. We need to do what I call a nat gas on it. For those of you that don't know what I mean, go and look at the price of nat gas over the course of the last 2 months. You'll know exactly what I'm talking about. Maybe another leg up in coffee beckons. I think we need to see a bit more of a crisis, because lockdown doesn't help coffee importers, right? Because they don't sell much coffee. People make it at home, so they don't go out and buy them. So as a result of that, coffee imports will probably be a little lower at the moment. But wait till we come out of the lockdown and these cases fall back again. They're going to pick up again. Hey, Geoff, one quick thing on this, right? I was showing the guys earlier. Look at this for case counts. So I need to share my screen. Just give me 2 seconds here while I share my screen. This is how insane the world is, right? Italy, the focal point for COVID. The Delta effect. Okay, they've had it. It's going away. Probably because they've got so many people now either vaccinated or have got immunity. Look at the States. They're still learning. Can you believe that? I'm not sure that number's still real. 500,000 cases on Friday. That's insane, right?
And there'd be a fair few out yesterday, or is it still today? Yesterday. No, today. Yeah.
So no wonder Biden's getting concerned, right? He must have seen some of this coming. That is spiking. Okay, time to worry again about the States. Oh my God, are they going to lock down again? Who knows?
Who knows? Mate, have a great week. Thank you very much. We'll catch up with you next.
Cheers, Geoff. Cheers, everybody.
Righto, happy days. Let's zoom in a little bit now and investigate or focus on the F word. Yes, it's fundamentals time. Here's Alexis.
Right, hi everybody. Welcome to Sunday Fundamentals. Bit of an update. It's going to be an exciting week next week, and this is the reason why. All right, I'm going to show you a couple of shots, basically a couple of headlines, right? So I think it's really interesting that this is a article on September 8th. So September 8th, there was a whisper in the wind and says that the ECB is going to kick off its tapering debate as inflation surges to a 10-year high. Okay, and again, I think 2 days later, okay, this article came out. The little subtext says that ECB says it will moderately reduce the pace of its crisis era bond purchases. Now this becomes really interesting because about 1 or 2 weeks back, there were talks of tapering, right? Where we actually hear that US is going to start tapering, that there's talks of whether or not the tapering will actually start in that sense. So what actually caught my attention here, that this whisper of tapering has actually reached the euro sector, the ECB, coming on record in a Financial Times saying that okay, it's going to moderately do tapering. So I think what it means is it kind of makes the US dollar suddenly more interesting to me. All right, so I'm going to go to the US dollar charts, and I think a really probably a simple reason is why. Now, previously when the US spoke about tapering, I was very hesitant to trade the US dollar because in the end, there's a lot of talk about it, but until some some decision or something concrete is made, it was really difficult for me to trade the USD because there was no clarity over it. But somehow this news of tapering has reached the euro. So I do believe that there is whatever rumors in the wind, whatever talks that are being on, I do believe that tapering has become more of a reality in that sense at this point. If even the ECB is talking about it, I think the reality check is going to come in. Tapering is really going to kick in, and I think what that will happen is that will provide quite a bit of opportunity for the US dollar, to find opportunities in the US dollar. So as you guys know, the tapering just means that the federal government will stop buying so much assets, so much bond purchases. They will actually stop, not stop, but reduce bond purchases greatly. And I think this is a quantitative tightening way of trying to eventually push towards an increase in interest rates, right? By reducing the supply of money into the market, by limiting the supply of US dollars in the market, by not injecting it any further into the market in terms of purchases, bond purchases, they're actually doing the reverse. They're actually slowly going to ease off the bond purchases. They're slowly tightening the liquidity, the amount of liquidity in the market. And it looks like euro side is also going to do something very similar. So I'm very interested to see how that will play out, because I believe that if euro comes out, if the ECB actually came out on paper to say that they are seriously considering this, I think it makes the potential of an interest rate increase from the US a little bit more of a reality, right? I mean, there is apparently something going on somewhere, right? That suddenly makes the decisions, all these decisions and talks a little bit more concrete. So I'm really interested to wait for dollar longs. All right, so I'm going to wait and see whether or not we can take any opportunity in the next couple of weeks for potential US dollar longs. And again, I think we're also in towards the last quarter of the trading year. So this will, again, is a really interesting time seasonally in terms of where this US dollar trend will go, and I'm sure Ash will share a little bit more about that later. But I think what really interests me is that the reality of an increase in USD is a little bit more real, and with that, the potential of dollar longs, has become a little bit more real to me as well. So if I'm going to scroll down really quickly through the dollar pairs, let's just see where they are, and can we find any clarity, to find any opportunities, in the next coming weeks. So dollar CAD, for example, I think it's interesting that last week price has broken above this horizontal level, my purple level here, formed formed the low test bar, and it looks like there's a decent support level over here. Very potential, of an upside. Let me just do the weekly charts it'll be a bit cleaner. All right, you can see the weekly charts. We have a little bit more of a higher low happening. In terms of technicals, the chart starts to look a little bit more bullish in that sense. So dollar yen, you can see a little bit more bullish on the weekly charts. There is a lot of support pressure at the bottom over here. Dollar Swiss as well. All right, it does look like we are having higher weekly lows. So what it makes it interesting is if price breaks above the horizontal level I have over here, it will be interesting to see how long it takes to do that and whether or not we can get above it. Dollar Kiwi as well. Let's just see if I just shift the horizontal level a little bit, maybe somewhere around here. Okay, maybe a little bit more room. The Kiwi is really pretty strong at the moment, so I'm just wondering whether the dollar Kiwi will be able to test this level and hit to the upside. All right, so it might take some time for the dollar longs to come into play. Dollar Sing, again, it is at a really interesting level. There is a bit of exhaustion happening. It had 2 very bearish weeks, and suddenly last week was a very indecision candle over here. So I'm just wondering or not whether the dollar will be able to do this, or will it be able to find the support over here and just hit back up. So it might not come into play immediately in the next week, but I do believe a dollar long play will start to become interesting in the next 2 to 3 weeks. Very similarly for the euro as well, with talks of tapering happening. I'm also wondering whether there will be opportunity in the next 1 to 2 weeks. And if you look through the euro pairs, you have euro Aussie testing certain resistance support levels over here, right? And I'm really interested to see whether this levels hold, and will we be able to look for long opportunities to the upside. Euro pound, if I extend this line a little bit, there is a support that seems to be holding at the moment, and the question to myself is, will we see further pullback before it goes up, or will it eventually, how fast will it go up? Will it go up next week, or will we see more pullback before it hits it back up? We are already, bouncing off this level over here. We have had, and again, I'm still on the weekly charts. We have had, a very clear bounce off a support level over here. And the question again, will we get a retracement and a boom, or will we get a, is this a continuation pattern, and you will find upside based on, the rumors or the talks of ECB tapering? Euro dollar, okay, euro dollar is a bit interesting since both the euro and dollar are talking about tapering. So I do believe euro is probably something that I will still prefer to trade very technically, and I will probably ignore it for now, because in the back of my head, since the euro wants to taper, since the dollar wants to taper, I'm not sure how that will play out in the bigger picture, but I am definitely looking for dollar longs as well as euro longs, as I believe that something is happening at the areas due to the tapering decisions, and I think a lot of traders will be very geared to go long on these 2 pairs, depending on what actually finalizes in the news. All right, so that's all for me this week, and that's what I'm looking out for next week. Cheers everyone, good luck trading, and see you guys next week.
Thank you, Lexi. Much appreciated. Interesting that we had, from a currency point of view, we had 3 central banks released their statements during last week, and we had an inside bar on the euro, we had an inside bar on the Aussie, and the CAD, dollar CAD, was the only one that really moved a little bit, but didn't move that much. Very interesting that the market isn't doing a whole damn lot at the moment, which leads me to the question. I wonder what the commitment of traders are, and I wonder what seasonally we can expect in the next little bit. To answer both of those questions, here's Ash. G'day, mate.
Hello, mate. How's things? All right?
Oh, look, top of the world, mate.
Well, you're the bottom of the world, according to me.
Yeah, well, stand on your head.
So yeah, interesting actually. Just hearing what both Julian and Alexis have said. It's quite interesting to kind of hear the perspectives and the anticipation that we might start to bring into play. When we come to the dollar at this particular stage, there's not a whole bunch of commitment here when we look at the messaging. Here's the dollar here. And I'm really interested in this particular area here rather than the other two. The other two are shorter term time frames. So we're looking at the 6 month and the 18 month, which are suggesting that there is some selling pressure from the commitment of traders. So the short term there, that's the 18 month, and there's the 6 month, both at zero. But the 36 month, the 3 year, which is really the kind of the real benchmark, isn't really kind of telling us too much. It's above the 20% line, so it's not really bearish, but it is below 50. So we probably should have a negative kind of stance on the dollar in accordance to the COT data. And if we look at the seasonality, things do get kind of interesting here. If I can, I see one. Let's look at the seasonality and see what that suggests about the dollar, because when we look at the seasonality, at this particular time, we're going into the second week of September, third week of September, in accordance to the days. And we can see that there is a bit of a dip, and it actually looks like some of the lowest point of the year before we really start to rally throughout the end of September into October, another dip, and then a big rally up until around about the middle of November, which is the biggest, actually. That's the time of the most bullish price action in the dollar. Which is why what Alexis is saying is really interesting, because maybe we are looking for longs in the dollar. Possibly the timing isn't quite there yet if we are to trust the seasonal patterns, but it does suggest that there may be something coming. And to hear what's going to happen about the jostling between the taper announcements from the central banks and what you were touching on, mate, about the different announcements may well kind of push this around a little bit before we start to see the seasonals play out. The Aussie is the only other one that is of huge interest, because the Aussie does have every single time frame into positive territory when it comes down to COT data. The 36 month is nicely above the 80% line, and it's at 91. The 18 month is at 100%. And the 6 month is also at 100%. So the Aussie looks to be the most bullish in the short and far term for short and long term for in accordance to the commitment of traders. But when we bring in the seasonals, there isn't that confluence when we know this is not what we really want to see. A big potential move down in September. So really, in accordance to seasonals, we should be looking for Aussie longs in October. And then, to be fair, the Aussie longs in October are probably, one of the most bullish during the year when we kind of like compare that kind of movement. It's one of the more bullish movements of the year. There's probably three. You got that point there, and four in actual fact, and that point there when we start to see the Aussie tend to rally. So as long as the COT data remains in this area, remains in bullish kind of territory for the month, then I think that that confluence would really help, and it would probably suggest that the Australian dollar is the safer trade. But we know things change, so we're just going to have to wait and see what happens with the data as the month rolls on. So to summarise, dollar looks a little bit weak when it comes down to both the seasonals and the COT data. The Aussie has not yet lined up, and they look the two clearer out of everything that we've got right now.
No, it hasn't lined up. I agree with them. I've been waiting for it to line up. But it appears to me that the only thing that really is holding it back is the situation in Melbourne and Sydney, which continues to drag on. Mate, thanks so much for interrupting your day. I know it's a busy one. I hope the hairdresser didn't charge you too much.
More on that tomorrow.
Okie dokie. We'll catch you tomorrow, mate.
Thanks, buddy.
Somebody else who's been busy today, but I don't think she's got a whole lot of faith in her favourite subject, which is gold at the moment. Has it got a pulse, or
no pulse?
Zero pulse?
No pulse. Oh, it's just sad. Just so sad is all I can say. Let me just show a screen. I'm going to keep Paul. Share that. Let me just move us over out the way. Look, what can I say? This is 4-hourly chart. I'm doing the 4-hourly chart because I'm trying to find something, anything on gold. Look at the 200 moving average, flat as a stick. We've got stitching here. We've got the MACD down. We've got the ADX down below the 25. It's gone up, it's gone down, and it's so lackluster. It's just nuts. It just isn't going anywhere at the moment, I'm afraid. And I'd love it to actually just get a bit of life, but it doesn't have a life. I know, I can relate to that. But it's just range trading. And it shouldn't be. It shouldn't be, and we all know it shouldn't be at this time of the year. I'm hoping that a bit more with some tapering announcements or with something. We've got a direction in some way to actually give it some volatility. It can't. To me, that's just a. Let me just pop up to a daily. By the way, of course, I logged on today for the first time, and my charts have disappeared as well. So this just really is not very helpful. But you can see it's just sitting here. It's just, it went up. First of all, it got supported by the 200. This is a daily chart. And it's just gone sideways. It's a blur. So no pulse, Geoff. Nothing to watch, nothing to look here, nothing. I wait. I mean, it's come straight back down into this area of really strong support. Yes, it did a little dip just in the last 4 hours of trade on Friday night, but nothing to get excited about.
No. Look, I know exactly how it feels. I wake up without too much of a pulse some mornings as well. Mondays in particular.
Yeah, I'm feeling after the weekend we'll be light on the pulse tomorrow morning. That's for sure.
Well.
But it's been good. But yeah,
enjoy the cups of tea once you're finished.
I will.
All right,
yeah, I'll be back with oil, and again,
no pulse in oil.
very short and to the point. We'll just be chatting away about that on not much at all.
All good. Thanks so much. Yes, indeed. I think crypto world's still got a pulse.
Oh yeah, crypto world is pulsing. Although we did have a scare.
Oh,
I don't know why we had a scare earlier. It's not
nothing
happening.
Can scare you. It's gone there.
Yeah.
It goes down 70%. You don't get scared.
No, we're not scared because the others are doing well. So we did have a scare, see it as it went above near this line. Now this is what happens in Bitcoin. Just when you think everything is bullish, this was the day El Salvador made Bitcoin its national currency. And look what happened. So I think some banks are not happy. I think this was purely manipulation just to freak people out, so much so that now there are protests in El Salvador. Yeah, I would be protesting too if the value of my currency, national currency, went down, right? And I don't know what Big O is doing. We should call him, Geoff. And also, but it is slowly coming back up and recovering. Okay, so that's good. So that's about Bitcoin. And let's see Ethereum and the rest. But the rest seem to be doing very well. We still, okay, Ethereum also fell down from 4,000 to, wow, 3,000. Bargain. It's now at 3,004. But the thing is, as we said, when Bitcoin goes nowhere, the alts start moving. So people talk a lot about Solana. I think this is the next Solana. This is AVAX, so it's going up. I am bullish on AVAX, by the way. But the most interesting things is the smaller ones, especially the ones involving the Polkadot crowd loan. In fact, the Polkadot, the crowd loan, or the Kusama crowd loan. In fact, they have done so well that, guys, this last week, or last 2 days, we had this. The first Aussie to hit 100x. I know, don't contest this. There's another Aussie that hit 185x, but he's in Thailand. So we don't consider him Aussie. He's like Thailand. So this is a big benchmark here. And I'm showing you this. Look at that Moon River. It just keeps on going up. At $450 just that time, our Aussie was up 110 times from his investment because he invested at $135. I am made to understand If you guys invested at 300, you would be up 50 times. Massive, 50 times your investment. Now, here's another one. I was made to understand the Aussie missed this, but some of you guys may have gotten this. Just a reminder, Shiden, which is also the same family as Moon River. And what they do is they allow Ethereum applications to be deployed on Polkadot without code changes. So you have cheaper gas. So Shiden is 8.10. At $300, you would be making about 18 times here, okay? If the Aussie had gone in here, he would be making another 35 times. But I guess, Geoff, we got to settle for 110 times for the Aussie. I think it's going to hit 110 times again today. Or at least.
My God. There's not a lot wrong with that, is there?
No, there's not a lot wrong. I mean, what do you want in life? 110 times. It's probably about 95 times down.
Yeah, it's ridiculous. And the amazing thing, I know that you were talking to that Aussie person live on air and told that Aussie person to do exactly what occurred to get that return. Amazing.
Did you know that's weird, right? 1,000 guys. You know what that means? $1,000 invested here would be $110,000. That's all we're saying. And can, because Geoff knows the Aussie guy. Does he have a MetaMask wallet yet, Geoff? Does he know what a MetaMask wallet is?
I'll have to ask you.
That's it for this week, guys. And the mystery continues. Next week, we'll know if the Aussie has a MetaMask wallet or not.
I'll see if I can get the answer for you.
Okay.
Cheers, mate. Thank you so much. And thanks for coming in early, just in case. Appreciate it. All right, let's turn our attention to, from one pulse to a no pulse again, to the black gold. And Ainslie, there's not much to say.
Here we are again. It's just, we had a bit of a move up on the end of the week, and that was it. It's just all sitting there waiting for something to happen. As you can see, it's come back and just sat below. I haven't got a close. This level of support, let me just chuck that in. Support resistance, beg your pardon. Look at that. Okay, nothing. It came close. Still just couldn't get below. It couldn't get above this level. It went up for about a couple of hours and then straight back in underneath. We're trading in a fairly tight range, which with oil, we do know that once it breaks out of a tight range, we can expect a really decent move. But at the moment, we're in the holding pattern, I'm afraid, and between gold. And when you're looking at your technical indicators, they're flat, they're stitching, there's just nothing to go on. And it's all just really, really tight. It's not even a big range. We haven't even got it back over. Like I said, we had a little bit of excitement getting up over $70, but nothing to go on. It's even worse when I pop it over to a daily. Look at this. Look at this, Geoff. Let me just bring that in. Look at that. Weeks. That's weeks of nothing. Just nothing. So hopefully
maybe the minute chart's moving a bit.
Yeah. Whew. Let me just, and I can blow that up, and it's all smoke and mirrors. But can we be realistic here? The pink line doesn't lie, by the way. It's just gone nowhere. It just, I haven't got anything to tell people on oil at the moment. I will,
and that's okay. If it's not there, it's not there. We simply trade wheat or currencies or something like that.
Lovely, but that isn't. That is not tradable until I get a proper entry.
As of midnight tonight, you were able to do more things, aren't you?
I haven't even heard the news.
I think Gladys is allowing. Oh, you're not a double dose yet, are you?
Yeah, I am.
Oh, you are.
Double dose 31st of July. So I haven't been to the outside world at the moment. In fact, all I know is it's bin night tonight, and my youngest has taken the bins out. That's all I've done. I've just.
Well, I think she's allowed to bay at the moon for half an hour or so while she's out there. So at least that'll be something.
And the weather's been perfect, but guess what's happening to our weather tomorrow? The weather's been 29 degrees and beautiful, been locked in my study. And then tomorrow apparently is meant to go down to 17 degrees and 14 on Wednesday. It was just like, you're kidding.
That's perfect for Tassie. What are you talking about? It's awesome.
Yeah, look, no, not this Sydney side, I know. She likes it a bit warm.
Way to go.
Yeah.
All right, mate. Look, thank you so much for interrupting IFP to come and talk to us. Really
You're
appreciate it. Although, as you say, there wasn't a lot to talk about.
Not a lot to talk about, guys. So hang tight and don't try and turn your head sideways and see if you can make a trade out of it. Wait.
There you go. Sound advice.
Yeah.
All right, mate.
All right.
We'll catch up with you during the week. Much appreciated.
Thanks, Jeffy. See ya.
Okie dokie. My turn, because we're without both our index man, Lloyd, and our stock reporter, Gordon, for this version of Weekly Market Update. But that, of course, will change next week when hopefully both of them will be back. So a couple of things from me. I'm not that keen either, Ainslie, I've got to tell you. But there are a couple of things that I am looking at. And perhaps this is the best of them. Euro Swissy. Euro Swissy, why? Well, you've just got to like that horizontal level, I believe. It's been a very, very strong support all the way through the winter or my winter and spring, even into summer of 2019. Dip below that level. I might go a little bit wider so that you can see the significance in that. It's done it before and it's doing it again. So it's gone back above that line, come back below it, and now retesting that level. So that level is pretty much key, and price does react off it. The question mark, of course, is this the time that it stays below, or is it going back above it? I'm of the opinion that I don't really care for the longer term, but for the short term, it's, in my mind, has to offer some form of resistance. So for that reason, I've got to be on the side of the game changer bars that I've got sitting there, which of course is pointing us to the downside. Strong resistance area. We've got a trend line that is perfectly in confluence with the horizontal level as well. So I've got to be thinking short this one. Euro Swissy, it's just a matter of when and how I get into it, whether I'm willing to trade this bar as it is. There's a little bit of an issue with the monthly pivot, but there's plenty of room to get some profit in the bank before that is a real issue. So I think I'll be willing to do that tomorrow if the market doesn't gap substantially and I don't finish up with a ridiculous looking chart. So that makes sense to me. Euro Swissy, you could probably wait for it if you wished to give you a lower high off the back of that. I think that's called, some people call that an evening star. That looks very much like a reversal pattern to me. You could wait for that lower high in here somewhere. But I think that, as I say, if there's no gap in the market in the morning, then I will look to trade that bar short, be taking profit around about the monthly pivot area, which is, let me see, around about 1.0780. I'd be probably getting a little bit above that, around about the 108 mark, I would think. So that is Euro Swissy, and that is most definitely my favourite pair for the week ahead. There are a couple that I am interested in as well, not committed to, but interested. Reason, very similar to what I've just described on Euro Swissy, really. This is Euro Aussie, and Euro Aussie is at a bit of a turning point as far as I can see. Big doji the week before last, and last week tried to go lower and failed, but couldn't get back above this level, which is around about 160, 150 area. Yeah, look, it's a bit of a question mark at the moment, I've got to say. The look of this chart tells me we're going back towards these lows. Then I zoom in a little bit and I see that I've got a game changer bar pointing me to the upside. Problem with the upside is you've got a heck of a lot of resistance ahead. That trend line number one, the horizontal level number two, I don't think the reward to risk to get to that level is sufficient enough to get me interested. And then I look at this trend line and go a little bit wider, and it looks very much to me like not only the trend line have we come back underneath, but certainly this horizontal level that I pointed out before. And we've now probably retested that, or have we? And that's the question mark that I've got. Have we retested that level? I think maybe early in the week, I'd love to see price sneak back up to there in congruence with the game changer bar. And then I start looking for shorts in this area. It may not get there. We may simply go short and retest this bottom or support trend line. But at the moment, I think it's too hard to trade. I want to see something more than what I've got. If you have a look at the daily chart, which I am currently, it's giving me a false break of the support trade line in the opposite direction. So very, very interesting, this pair. If it were to break that horizontal level and probably even the monthly pivot, then give me a retest of that area or this area, then I think we're probably headed to test these highs. So it's by no means fait accompli for this one. I'm getting signals both directions, so I need to wait on it. But I think if I get a strong signal off if we're going to the short side, if I get a test of that level, then I would look to trade it short. If I get a setup, if I get a break of that level and a retest, then I would look to trade it in the opposite direction. So that's the key level for me, and I am watching it very, very closely. I might not even get a result this week or something that interests me. Something that has been interesting me for a few weeks now is Aussie Kiwi. And when you look at that chart, you're probably thinking, okay, this level's in for a retest or another test, and maybe even this level's in for another test. And I get that completely. But the one thing that really, really does stand out to me is not that chart, but this one. And this one's telling me that 9 of the last 12 weeks have been selling weeks. Now let's go, the last 9 weeks have been selling weeks. We are close to a support level, if not on a support level. We're very close to a support level. So the only way I can think right now as a potential trade is not short with what is another game changer bar. The high is higher than this one, and it's closed on or around its low. So it's a game changer bar, but is it a game changer? What game are we changing here? That's a game changer bar. You know, that's a game changer bar. So they're actually working perfectly, except for last week. And I traded this bar long. Fortunately, I cancelled it before that Aussie announcement, which was the RBA statement, and we didn't get taken into the trade. But I did replace the order for an obvious result, which no entry. I'm still willing to believe that we're going to get a retest of this level. Now, trading that is virtually impossible unless you're just a genius scalper and want to jump in at the bottom of that candle. I just don't get that in terms of reward or in terms of risk anyway. But what I will be waiting for is something maybe on a smaller time frame, this being the daily chart. Something of a reversal on Monday would be good, and then a higher low on Tuesday or Wednesday in this vicinity. Then I would be able to trade it. But until that happens, the answer will be no. But I certainly am not looking to continue to trade it short. I'll hang in there for another couple of weeks. As I said, 3 reserve banks had statements last week. The Aussie was one of them. And we got an inside bar on Aussie US dollar. We didn't get it on Aussie Kiwi. But I'm interested to know as to why the Kiwi, which has also got its issues with COVID, nowhere near as serious as New South Wales and Victoria, Australia, but it's also there. So I'm really interested to know what's driving this. And investigation probably early in the week needs to be done for me. But 9 weeks in a row, if you have a look at the charts and go back as far as you want, I don't think you'll find that's got a precedent. 9 weeks in a row. It's time for a breather, I reckon. And I'll be looking to trade that, definitely on the smaller time frames. Aussie Kiwi, long. I'm not saying jump in now, saying wait for setup. Okay, that is my 2 cents worth for the week, and that is the show for the week. My thanks to those Ainslie and Ash in particular, who interrupted their sharing sessions with IFP, but also, of course, a very good big thanks to Julian, Shukri, and Alexis for joining us as well. They'll do it all again next week, as will I, and it's at that time that I look forward to your company. Have a great week ahead.